Many people have doubts regarding anomalies, and I will show you what an anomaly is and how you can use it in your trading. So what are anomalies? First of all, let me show you that. So let us look at these 2 days, August 23 and 24. Now when I look at August 23, market started to move higher, went higher, and closed somewhere in this region. But when you look at the profile shape, okay, now we are comparing the profile shape of 23 and 24th August with 25th August. You can see this profile shape is so smooth. And you look at this, there is one edge here, small edge here, not enough, gradient at the top. What is gradient? Gradient is this smooth curve at the end of the profile, alright? You can see here you have a nice gradient, but here you don't. You have a nice gradient here and here as well. But here what we have is we do not have a gradient. So whenever the profile shape is not smooth and the profile does not look complete like a nice normal distribution curve, you have some sort of anomaly. Anomaly is basically it is anomalous behavior. Anomalous behavior means behavior that is unexpected or that is out of place. Make sense? Something which does not feel right. Whenever there is an anomaly in the market, usually it happens because of few reasons. One, there is pending interest there. Okay, what do I mean by pending interest is that the auction did not get enough time to complete the business there. What it means is that lot of buyers and sellers wanted to trade with each other, but some of the traders in both buyers and sellers did not get the opportunity to buy or sell at this level, and market simply moved away from them. Second reason is forcing action. Forcing action means one of the sides, either buyers or sellers, are just hell-bent on pushing the market in one direction. They do not have a clear objective. They are just blindly buying every pullback or blindly selling every rally. And when that is happening, you see such anomalies left behind. Okay, so in this case, either it was forcing action of buyers or pending interest is left behind and the traders did not get opportunity because of the forcing action of the buyers. So we have a few anomalies left on August 23rd. Then we go to August 24th, and let me just show you. You can see this is a very weird pocket which does not look complete. This is an anomaly, right? This individually is an anomaly. Two edges are there, okay, and again you can see no gradient at the top. So this again is some sort of anomalous behavior. Again you can see this L period, just one TPO sticking out, again is an anomalous behavior. Another way to find out anomalous behavior is when you look at the volume profile, you will see many peaks, okay, multiple peaks you can see here. Whereas if I just show you on this chart, if I just see here, the volume profile is very smooth, nice gradient at the ends, nice peak in the middle, and nice smooth gradient, right? So if it is not like this and it is like this, then there are some anomalies. Okay, so this is how you identify the anomalies. Now you can see if there is pending interest, then the market will find it difficult to move away from that area. Okay, so there are a lot of anomalies here, and that is not the only reason why this day fell down, but there were a lot of anomalies. And if market goes higher, okay, first and foremost, many traders, many market profile professionals, so called, will tell you if there is an anomaly, market goes higher, it will come back and visit that anomaly in T plus 2 days, T plus 1 days, T plus 3 days. That is completely stupid. Okay, it is not at all correct. There are anomalies. The profile structure is not smooth. The business here looks incomplete. Market gaps up. We already saw forcing action of buyers here because prices closed higher. We again see market forcing the issue, buyers forcing the issue, closing or taking it higher, and then it stops going higher. Then it falls. Then it goes below VWAP, pulls back to VWAP. Again supply comes in and it takes out day's low, and there was a small gap. It also closes the gap. Now when you see these signs happening, what are the signs? The first sign is the market stopped going higher after B period. No subsequent range extension. Warning number 1. Okay. Warning number 2, market goes below day's VWAP. Warning number 3, pullback to VWAP does not cross back above the VWAP, it fails. Warning number 4, day's low gone. Warning number 5, a nice gap was formed at the open, that also is taken. All these warning signals are there. What are they telling you? That higher move is not sustaining. And then you go back and you see, okay, there are some anomalies left behind. Then you conclude that yes, it was forcing action. It is not likely to sustain. There are lots of anomalies, and then there is a high probability that all these anomalies will be repaired or traded through. And what happens? You can see, you trade through that and you also get a follow through to the downside on the next day. So even if you waited till the gap was filled and took your short position, you still ended up making money. Alright, but there are countless examples where anomalies are left behind and the market never comes back to test it. Okay, again you can see here we talked about multiple anomalies left behind here. So what that tells me? That tells me that this might be, okay, we went higher because buyers were forcing the action. Now we might be coming lower because sellers are forcing the action. How do you confirm? You wait for the next day. What is happening on the next day? A nice balance. What does that tell you? Here, when market was going higher, buyers were greater than sellers. When market was going lower, sellers were greater than buyers. But when you are balancing, buyers and sellers are in balance. They are equal, they are matched. What does that tell you? Whatever selling was coming in, now it is being matched by strong buying. Market moves sideways, takes a lot of time. All those traders who were waiting for T+2 and all, they are killed. And then finally market goes up. And see, if I draw a line to the left from this point, make sense? And probably if this is not completely old business, we might get some follow through to the upside. The anomalies are there because there was either pending interest, incomplete business, or forcing action. And usually if the market wants to move in a certain direction confidently, the smart money would not like such indecision points left behind, right? And they will try to come back and correct it.